Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. I posted the chart across the pond for the DAX and the FTSE. As you can see, fear has gripped the world. It started yesterday afternoon, actually, when Italy shut down northern Italy up around Milan, and that's what caused the start of it, for what they're telling us in the news, if you can believe anything, and I'm not sure we can even do that. Here is my best guess, and it's not my best guess. It comes from someone with several medical degrees that really understands what's going on, in my opinion. So here's what I think is happening. The real problem happened, I believe, on Friday, Thursday or Friday, and that is when the World Health Organization, not the least corrupt place we've ever met, came out and made a statement, and the statement was, there is a very narrow band of time to control this virus. That was basically construed by the medical community that it is basically out of the bag already. The reason for the problem is from Middle East, and if the virus starts spreading through Turkey, Afghanistan, Pakistan, China, or not China, but India, that's big. But if it gets into Africa, it's game off, because the thing will really be crazy. They have no way of containment. They have no way of treatment. In 1918, the Spanish flu killed roughly 50 million people. They're not even sure. It was around 6% of the population of the world. And that was pretty big. In the United States, we had a population of 108 million, and we lost 687,000 souls. So I don't know if it's going to be like that. These are things that they're throwing around, but watch what's happening in the Middle East, and also in Africa, because if it gets there, that's where the real problem really lies. As you can see, we've broken down through some pretty serious support, and the Dow. Biggest, we've been expecting a 1,350 point down move in the Dow one of these days very soon. Today might be the day. I don't know. I don't know what the limits are anymore. They'll probably tell us, but be very careful out there, folks. Don't trade these markets without stops today, because the Fed's out there, and they're coming to work this morning. And if you remember what happened back on January of last year, remember January 31st, we had that big drop. And the market came right back from there. So be really careful in these markets at all time. The crude oil is breaking down, much like we thought it was going to do. We had that big ABCD up there at 54 and change. Now we're $4, almost 10% below, 9.5% below that level in just a few days. And that's a very important thing, to keep watching for sure, because it's going to be really interesting. It's affecting all commodities. If you just look at the green, there's hardly anything green on the board today. Beans, oil, corn, wheat, all that stuff is getting hit pretty hard, mainly because of the fear that's involved. But the other thing that's also it's the way these stuff, the chain of supply, the food chain, the medical supplies, all this stuff. We're integrated with China. I mean, they buy a lot of our stuff. We buy a whole lot of their stuff. So that's where the real problem. Plus the people not being able to go to work, and restaurants shutting down. This is a real problem, which it's not. We've been saying it for quite a while. The market didn't realize it until last Friday. And now it's starting to realize it. Maybe it'll catch up. Maybe it won't. We don't know. It's always interesting to watch the markets unfold as we see them unfolding today. We have I don't think we have any guests this week, do we? No, we don't, but we'll find one probably. We'll get one somewhere. Anyway, let's take a look at a few of these markets tonight. The main one I think we have to look at, of course, is that gold market. It's had a tremendous move, which we thought we were going to see, and we're certainly getting it. We'll get this chart up. You'll be able to see here that as we get up to this level, We're not very far away, folks. We're really not where, folks. The limit on the S&P, they've just told us, thank you very much, Tommy, is that the limit is 3170. In other words, if the market gets to 3170 in the S&P, we're 32 and change right now. If we get to 37, down to 3170, they stop trading for, I believe, 15 minutes, and then they reopen with another limit, another 5 or 10% on that. But they're trying to basically control it. The Fed will come in. Shane told me this morning, we were chatting earlier, and they could certainly come in and do this. Again, we have not had this before, folks, in a very, very long time. I've seen it over my career a few times, and if we get it, it's panic. See, hey, look, fear is a greater emotion than greed, folks. Let me tell you something. It really is, because fear has, physical characteristics that greed does not have. Greed has euphoria. Fear has, bulging eyeballs, chalky white mouth, sweating, diaphoresis, white knuckles. I can see them in the picture this morning as I'm looking at myself. So anyway, that's what you have to worry about, is the markets come down a whole lot faster than they go up, and they also go up pretty fast, when they start to rally. So keep in mind. You'll notice this chart gives a price of $17.35. We came within $40 of that today, and we could be there in the next hour or two in the gold market. That's pretty much what's happening. I don't know if it's going to happen that way, but that's what we're looking at. We'll keep a close eye on these markets as we watch them, moving around. We're up to 1684 now in the gold. We were as high as 1695, I believe, last night, as high as we got. The crude oil has broken down quite a bit, and we'll be able to see the S&Ps now at 3266. And so we'll watch that. Okay. We're having a pretty good move now in that Japanese yen position. If you remember, we were looking at that. That looked like it had a really beautiful bottom down in there. And it certainly has had. And it's now moved, well over 100 pips, out the, to the upside. Now we're trading above 90, which could be pretty good. That'll be a very interesting one. That reminds me of King Dollar from back in 2011 when Tom coined that phrase. Natural gas is getting very close. It has to be holding down in this area, Marshall, but it's a $64 question of whether it's going to or not. And with the news where it is everywhere, it's very, very important. Let's take a look at this natural gas here for just a second, because we've had some really wild swings. We got all the way up to 204. We've dropped 20 handles, folks. We dropped $2,000 into today, and this level at 1080, at 2004. Golly gee. Had so many numbers running across the board, and 1.84 was the number that you wanted. Going below 1.84 in that natural gas, I am going to say that it's no longer feasible. So I would just look at it. The big one, of course, are the notes and bonds. They're making some big moves here, mainly because of the fear thing. So we'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to postpone the end of the world for a few minutes here. Just embellish me with a little bit of your time. Friday night, we had the opportunity to go down and listen to none other than Charlie Pride, the pride of Sledge, Mississippi, born at the same time and within 15 miles of Elvis Aaron Presley. He's one of my favorite country and western singers. He's 85 years old. He's getting old. He can't move around much, but he put on a fabulous show. His voice is still good. His band, folks, had a combined years. The 5 players in the band had a combined years of 420. The 5 players had 380 years of experience, and most of those have been pretty good. That was one of his big hits. There was a lot of them, folks, but let me explain to you how the show went. He gave an hour and a half nonstop. One of his old buddies, me and Bobby McGee stopped in, and that was really super cool. But the real highlight of the whole thing is to give you an idea. Remember, I live in Tucson, Arizona. This is cowboy country down here. Everybody in there had white hair except the 3 people that were wearing cowboy hats, and we couldn't see the color of their hair. I mean, it was really old folks renewing. There were about 3,000 people, totally filled. And about halfway through, he said, folks, I'm going to take a little time out, just like I'm doing right now. And he said, I want to do myself a favor. He said, I'm going to sing one of my favorite songs. And he sang a tribute to America that brought the house down. I mean, they literally got up and clapped and screamed and the old USA, USA, that kind of stuff. It was really, really good. Everybody really got a big thrill out of that. And he says, folks, he says, that's the same response I get everywhere I go. And that was really, really good. So here's my 2 cents worth, why I do this radio show and my 1 hour of fame every day. And we'll see what's going on. Tommy, thank you very much. I appreciate that number in the Dow. That is something that I really need to know. 27. Let me write that down. 27521. There we go. All right. Now let's give you. Let me tell you what happened this weekend. This weekend was the anniversary of the hockey team winning the gold medal in Lake Placid, New York, back in 1980, February. I was home with the flu, very bad case of the flu. My daughter Laren was also sick. Jill and the ex had gone to church, living in Westlake Village, and I don't like hockey at all. There was nothing on TV because it was early in the morning coming out of New York, and they were playing Czechoslovakia. I think it was Czechoslovakia, yeah. And anyway, they were a big underdog. They say they had basically no chance of winning the game, and so we were watching it, and nothing was happening. And Al Michaels was giving on the score was tied 3-3. I mean, it was really quite exciting, and there were a lot of movie stars. That's why Laren wanted to watch it. Farrah Fawcett was there, and a bunch of other people, but. The Americans got a goal and they got ahead 4-3. And Al Michaels said, "My goodness," he said, and there was only like 4 minutes to go in the game. He said, if the Americans can score another goal here, he said, pandemonium is going to break loose. And Laren said to me, she said, "Dad, what's pandemonium?" I'm not even watching it. I'm sitting I had a rattan, one of those bamboo chairs that I had built a chart thing. So I was doing my charts. And I said, "Oh, honey," I said, "that's a little dog that comes out on the ice with an American flag on his back." Not more than a minute or two later, Al Michaels starts screaming, "Pandemonium is breaking loose. Pandemonium is breaking loose." They got ahead 5-3. And Laren jumped down, and she was looking at, had a big screen TV underneath the stairs there, and she said, "Dad, where is it? Where is it?" And I said, "Where's what?" She said, "That little dog, Pandemonium." And I fell off my chair. I was laughing so hard, I couldn't believe it. And just at that time, the family gets home, and they think I'm having a heart attack. And my ex-wife yells to Jill, "Call 911." And Laren says, she said, "Let him die. He's making fun of me." Anyway, it turned out to be fun. So anyway, my kids called me to remind me of that it was very funny. But there's three parts to this. I bear with me, because this is a very important part of my history. About 7 or 8 years later, we are in a Drexel meet. No, it was a Bear Stearns directors meeting in Las Vegas. I was invited by one of the Drexel directors to be there to meet some of my old friends that I had got to go to work for Bear Stearns, and they were telling stories about their families. And I told this story, and it really was quite funnier than I'm giving it to you right now. But the best part of it was back in 1992. When we were in Chicago giving a seminar, Mark Douglas and myself, with 10 traders, and it was every day, and we had to make money every day or they got their money back, and we were having a lot of fun, and it was the Friday of the last day, and we were just having some fun. And so I told this little story, and at the back of the room, these dudes raised their hand, and they said, "Yeah," he said, "that was us." And sure enough, 3 of those guys were on that hockey ice that day: Jack O'Callahan and Dave Silk and Rob Merle. Anyway, this really brought a lot of memories back. And then just to give you a few other ones, about 3 years after that, it was about 1996 or 97. Mark was he was a very good hockey player for the seniors, and they were having their big party at the end of the year, and he wanted to do something special. And so he asked me, I said, "Hey, call Jack." I said, "He'll do something for you." And so he called Jack, and he told him, he said, "Why don't you just pick up the gold medal? Go over to the what was the name of that building in Chicago where they played? Not Union Center, something like that." Anyway, he went over there. The secretary opened the door. She said, "Are you Mark?" "Yes." And she handed him the gold medal. So Paula wore it to the dinner that night, and that was super cool. But the best one was in 2000. They were having the reunion in Lake Placid, Park City, Utah, and they invited Mark and I to go to hang out with them for the week of that stuff. And I was in China speaking. I'd been there a week. I couldn't get out of it. And so Mark went and had a really great time, and we've still got to be friends with those guys, for quite some time. And then the final one of this group, and then I'll get back to these charts, was in 2016. My lovely little sister and her husband Mike had box seat tickets for the Blackhawk games because he had worked for Skylar Oil. I can't remember the name of the oil company out of Chicago, and they had their own box there. And she had always wanted to meet Jack, and he works for the Blackhawks as a rep. A scout and also promotion. So she gets in, and he comes in, and he got to come to the room there, the box, and the owner of the oil company sees who he is, and he said, "Oh my God!" He said, "You're OC," and he said, "Yes." And she said, "Why are you here?" And he says, "Well, I'm here to see Carla." And he said, "Oh my goodness!" And so they started chatting. Ended up, Jack's in the business of money management for commodities, and the guy opened a huge account, which was really super cool. But anyway, that's what the fun in doing this stuff is. Anyway, I'm back to the show, back to work. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're still weakening up. We're down at, remember, we said a long time ago that we thought we would see 1350 down in one day in the Dow Jones. We're not too far away from that. The way we figured that out, the other one was 800 and some points. Multiply that times 1.618, and you'll get to the spot where you're looking at, something that looks, pretty reminiscent to what happened in the January the 31st area. area. So we'll see if that's going to be the case. It's not the end of the world. I've just posted the relationship between the coronavirus and some of the others from the World Health Organization. You can see how much more significant it is. And it's been significant, folks. They just haven't been telling us about it for 2 weeks. We've been getting spotty information, false information. So much stuff on this internet is just, oh my God, it's just incredible, the stuff that's out there that is not very good. Now, Marshall's mentioning about the Japanese yen trade, folks. There was nothing wrong with that Japanese when it was down there. I mean, nobody absolutely wanted it. All we were looking at, these patterns, folks, they have predictive nature, but only within limits. What they do have is they have a good way of risk control. The 78% level in that yen was 89.44. It is now almost 90.44. I mean, that's a big move in the yen in just a couple of days. So not as big as the stocks, but that's still a very, very big move. So we'll see whether that's going to be moving up to see if it's going to be the same thing. We're having a little bit of a move in the euro, but nothing like anything else. Right now, it's the fear aspects coming in, and as we mentioned before, the fear aspect is far, far greater, than the greed aspect, because greed has complacency and stuff. Let's take a quick look here at the silver. The silver's had a pretty good move also, but nothing. Let's just double check this so you can be able to see here. Silver finally got up to take out the highs of January. Gold is really soaring, but the other one is not doing nearly as much. So that's neither here nor there as we're watching it. The British pound is holding up okay. Those are not the exciting ones. The exciting ones, of course, is the Japanese yen, of course, is doing extremely well, and that U.S. dollar is holding up incredibly well too, because it's up still above that 99.50 level, which is very good. All the commodities are getting hit. That's all related to supply chain stuff, and I would highly recommend. I don't want to. I better shut up if I say that. I better say anything. You ought to have a little bit of food and water on hand, folks, just in case it gets crazy. I know it's not a Y2K thing. I lived here in 2000 when Arch, we had the Y2K thing, and Arch barricaded himself. He had claymore mines planted around his house. He had all kinds. He bought 2 years of dried food that he ended up giving to somebody, and all kinds of water. But the Y2K went and did nothing. This is a disease, so we don't know what's going on. The news we get is not very good, and when we do get it, it's probably late. So be careful, what you're doing here. Remember, folks, we are only, like Tommy O'Brien said in the beginning of the show, we are only 2 days away from an all-time high in these markets. So that's what's a little bit scary. So we'll see what's going on here. We got a caller here from Florida. Max, are you there?
Yeah. Good morning. Good morning.
Good morning.
Where would you look to short gold at on your chart? Hello? Larry?
And 11. Does that make sense?
Sorry, I didn't hear you.
Uh-oh. I'm sorry, but the Skype went out for just a second here. We had an internet connection. I believe it's $1,735 an ounce. I posted it in the room here today, is the 78% retracement from the August of 2011. So I hope that helps. I don't know if I'm coming through or not. Broadsword to Danny boy. Okay, good. Well, that's what I'd be looking at, would be 1735 is what I'd be watching.
Okay, fine. Thank you.
Okay. I hope that helps, Max. Thanks a lot. And stay safe when the old hurricanes come this year and stuff. I know it's tough down there in Florida when those seasons come. So we'll move on to the next one. 877-927-6648. And we'll move on here just a little bit. Folks, this is starting to, it's getting more and more in the news now. So oh boy, am I getting a bad connection. 10-4 here, 10-4. Anybody hear me? Oh boy, oh boy. Unfortunately, I was able to I was supposed to have Shane on this morning, folks, but he's tied up with the market, so that's fine. I'm having all kinds of static. I guess it's coming through from my end on the internet, and it's intermittently. It looks like sometimes it's coming through, sometimes it isn't. So I'm just going to keep talking until something doesn't work as well as it should. So we'll see. Okay, at least it's nice and clean coming through. That's the main thing that we want to be watching. I wanted to share with you this. That Shane brought to us. This is this solar cycle. Of course, the solar cycle should have topped here back on the, what day was that? That was way back a long time ago. Think about February the 16th. And here we are 8 days later. This is the solar cycle for gold. It's actually done pretty well over the years, but right now it's extending to the upside. Folks, when fear grips these markets, you can see what's happening. A lot of you folks that have not traded before haven't seen this. If you could multiply this by 10 times, this is what was happening in the crash of October of the 19th of 1987. This was nothing. Remember, just the Dow was down 16% that day from a level of 2,700. It bottomed at 1664, I believe, was the bottom on the 20th, which was a perfect 61% retracement from the low of August the 9th of 1982. This is nothing. Can you imagine 16% coming off of 2,700? You'd be looking at a drop of just about 4,000 points in the Dow in one day. That's not going to get anybody reelected, I can tell you that. So we'll see whether that's going to happen or not. I don't know whether, what's going to happen with these. Let me double check the markets because I'm not able to do this while I'm looking at it. We've done a little bit of a bounce here. The key here, folks, is I believe these Treasury bonds are going to hold the key. And hey, this is my 2 cents worth. I'll just give it to you. You do with it what you want. But this was the number that I was talking about last night. If you'll give me a second here, I'll post this puppy and you can take a look at it for what it's worth. And believe me, it's all probabilities, boys and girls. It's all probabilities. This is there's that 167 level in the bonds, and whether it's going to mean much or not, I'm not sure, but we'll see if that's going to be the case. We've just dropped $11 in gold in a matter of 4 minutes, so that's a very interesting one also. So let's keep in mind on these. This is going to be a real interesting day. We've already rallied 200 points in the Dow Jones in 6 minutes. So this is not for the faint of heart, as they say in the trade, not for the faint of heart. Okay, let's move on here. And we got the break coming up, and we're having a special guest in a few minutes. Ben Bernanke is going, Ben just canceled on me. Doggone it. We'll have to get somebody else up here. 877-927-6640.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th.
The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back. I hope we have Shane Smolyan on the air today. Shane, are you there?
Hi, Larry. Can you hear me?
Hey, you're coming in perfectly, my friend. I've started the first chart. I believe I started that I posted in there was oh dear, I've forgotten. I had so many things going on today. Which one did I post? Shut the front door and raise it. He'll tell me in just a second, hopefully. Okay, they're going to tell me here in just a minute, just a second here. It's the one on the bonds, and then we'll do the S&P. Do you want to tell us what we're looking at here? And do you think the Fed's going to come in here, and have they already come in? What do you think?
Well, this is an interesting chart here. So first of all, the Fed juice did go into a sell on Friday, and the planetary speed index is lower. However, I typically like to see all three of them, including the solar index, down before I would say even consider a short in the S&P. So I had that S&P just essentially at no advantage right now. I really think the Fed's going to come in hard here. We're already starting to see a little bit of a bounce. This is an equivalent move to the January 31st move down. So, we need to keep that in perspective, that until we break down below those levels, this is still relatively contained. It should not be a surprise with the coronavirus out there. I mean, it's surprising to me that it has held up as well as it has. But we were able to catch this move on the bond side of the market, which I'm much more comfortable being long the bond than I am being short on the ES, because I just think that ES, that it's so treacherous to short that thing, because you can be up 1 minute and then 2 hours later, the whole move down is erased. So I am a little more cautious on shorting that ES, but there was the Fed juice down and the planetary speed index down, so it's not surprising that it's trying to move down. But I really think the Fed's going to come in here hard, because I think the Fed is taking this very seriously. We heard in the testimony that they view the coronavirus as a global economic threat. So I'm just not a big fan of shorting the S&P, but it's not surprising here that it's lower. I really like to be careful before I have any kind of a downside advantage on that.
Okay, that makes very good sense. Regarding the virus, how is it holding on with the what your projections were? Because we're at almost 80,000 now, and just a few weeks ago, we were at 7,500. We're 10 times higher than we were the last time I think you had on the air.
Yeah, it's an interesting phenomenon here, because most of these cases are in China, and I don't know if you're able to show it for the listeners, but essentially it's following two different paths right now. If you follow the first parabolic path up, the red line up, it's a much more severe projection above 110,000 in a week, but it does look like it's tapering off a bit. So in essence, if you put those two models together, you get something that looks like a cone, like you would see on a hurricane forecast map, how they have that projection cone. So if you're dead in the center of that projection cone, you'd be somewhere around 90 to 95,000 in about a week. But it's really hard to tell because these cases can we're seeing in Rome, we're seeing these outbreaks showing up in South Korea now. So it's hard to track it. And are these numbers even true? I mean, that's the other thing to consider. Is this even true?
Yeah. Yeah, Shane, someone, a very good friend of ours who happens to be double doctor type guy, PhD, MD, said that the problem would come if it gets into Africa because they have no way of containment, no way of treatment. And he said that's when it would really go crazy and could, really cause more damage there than any place else. Any thoughts about that in the Middle East or Africa, whether that would be the case?
I could definitely see how that's a problem. No doubt about it. That is a problem. And I think another problem that people are overlooking is the prisons. They were saying that the outbreak is starting to spread in the prisons. And how do you quarantine people in prisons? I mean, that to me, that's a big problem. Because think about that. How are you going to isolate prisoners? I mean, you can't. So it's go ahead.
I got an idea. Just let them go. No, yeah. That was a sort of a joke.
Sounds like something out of a Batman episode.
Yeah, very bad joke. Go ahead, my friend.
Yeah. No, so anyway, I mean, it's definitely a big question mark here with this coronavirus, and I think on balance, I think the S&P is holding up pretty well. I mean, I would have expected this thing to really have sold off more, but I think the Fed is essentially all they care about is just stunting the acceleration down, because what happens is you get these positive feedback loops where all of these orders and these computer trades, they all start to trigger, and you get this momentum going as we saw in the flash crash. And then in the flash crash, the market makers just went offline. They shut off their computers, and the high speed traders, they all just shut everything off. So there was no market. So I think what the Fed really cares about here is just to stop, just to kind of pause it for a second. And I showed my subscribers on Friday that there's these Fed zones that come in the day, and the Fed is really just trying to stall this acceleration to the downside. All they're trying to do is stunt this acceleration. So I think as long as they accomplish that, that's what they care about. I mean, right now it's in terms of this corona, because this is a very large event right now. So they just don't want that panic selling.
So this is the plunge protection team doing their thing. They're just keeping it in control, supposedly. Yeah.
Plunge. Okay, so let's distinguish here between plunge protection team. Plunge protection team is a term that came out of the 1987 crash. There's allegedly this rumor of as a team that comes in and buys the futures. Now that's all off-book transactions, and there's no way I could track that. What I track is actual published data by the Federal Reserve. So that could be happening, and that could happen at any time. But typically, what I track happens during the day, once the market opens at 9:30, and so. Yeah, it could. I mean, obviously last night there was nothing going on with the Fed, and the Fed doesn't act until, from what I measure, until the market opens, and that's why you get that selling before the open. But the idea is now we'll see what they can do to stall this. They stalled it on January 31st, so they can stall this again. I think they will be happy with that. And I've also shown on that daily Fed use chart. I can't show it to you right now because I'm in my car. I'm pulled over. Don't worry, I'm not driving. I'm coming back from the physics course. There was my daughter's high school. The physics teacher, the AP physics teacher, was a young physics teacher. He went home in the fall, and he was murdered. He was shot. Wow. And young kid. He was a young kid. I think he was like a PhD candidate, and so they didn't have an AP physics teacher at the school. Like it was an AP physics mechanics. It's like the whole thing, the calculus. Uh-huh. So I told them I would teach the course. So I stepped in to teach this one physics course. So I'm like, my schedule's weird. Like I drive across to teach the course, and then I drive back to the office. So I pulled over. That's why I said I couldn't post the charts today.
Oh, good.
But in essence, the Fed here they're just interested in containing that acceleration to the downside. So I think we got to watch this today. And again, I'm not real big, like I said, on shorting the S&P. I just don't like to do it. I think it's really tough stuff. But I think the long bond play is a much, much smoother play.
Okay. Well, that's good. Listen, I'm going to let you go and get back on the road. And thanks for pulling over, because if anything happened to you, the TFNN would never forgive me, neither would your lovely wife.
No, I know I'm pulled over. Don't worry, I'm pulled over. But maybe next time I can post some charts, or if somebody emails me, I'll post. I have a free member area. I can post some charts. I'll put some of these charts up to show. But I was talking about real quick about the Fed. So on the daily time frame, the Fed juice has kind of flattened out. So hopefully they pick it back up.
Hey, thanks, buddy. Travel safe. Thanks for coming in. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the E-mini S&P, and I posted it twice. Once you could see it with the red box over last January. We had that big break. Look at the difference between the big break now and that big break, folks. There's a big difference, quite a big difference. So pay attention to that. Now, we're going to get a lot of volatility, and there's going to be a lot of news and a lot of bologna coming out. So just remember, to make a bologna sandwich, you have to have fresh bread and mustard. Otherwise, it's no good. I'm trying to be a funny way of saying please don't listen to everything you hear. Prove it to yourself. Let the charts prove to you that there's something going on. So far, they're proving that. But what if the stocks, for some crazy thing, I don't think this could happen. What if they closed higher today? They've done crazy stuff like this before. So just prepare yourself for the uneventful by using a stop. Because if you don't use a stop, you're telling Mr. Market or Mrs. Market that you know more than they do. And boy, that's one thing we know for sure, that we don't know more than they do. One other thing to pay very close attention to, if we get a close above 167 in those March bonds, that is going to be extremely bullish, folks. I don't think we're going to go to negative interest rates, but I do believe that you'd get some more of a flight to quality. So far, we've been able to rally about 250 Dow points. We've been able to rally about 25 S&P points, virtually nothing when it's moving 100 points a day. So pay close attention to those as you look at these throughout the day. We've got the gold trading at 1678. With the high of 1695. So we'll see what's going to happen with that for the rest of the day. And we'll just do one thing at a time as we go here. Remember the numbers above 167.05 in the bonds. And if we get below 3170, look at that chart that I posted. 3170 is a 1.2 expansion. It's limit down. We go below 3170, folks, we have a crash scenario set up. I don't think that's going to happen. But don't get involved. Unless you're on the short side. Mr. Hugard was on here last week telling us that this might happen, and bada bing, bada boom, it's happening. So let's see, 877-927-6648. We'll see you on the flip side tomorrow, boys and girls.